Do not buy a house now. If you're looking to buy a property, stick around because there's so much going on in this area and so many things that could massively impact your purchase. I'm Biko Konstantinos and that's what we're going to talk about today. With house prices having risen crazily over the last year and a half, many potential buyers feel like they've missed out and they'll never be able to get into the market. And by not buying a property right now and waiting, you could potentially save hundreds of thousands of dollars. If you enjoy this content, please take the time to like this video, as that would greatly help get the message out to others. And consider subscribing to my channel because I'll keep providing balanced and informative information to help you with all your investing. Now let's consider why you shouldn't buy a house now. Before we go any further, please note I'm not a financial advisor. I'm not taking into account anyone's personal circumstances, and honestly now could be the best time for you to purchase a house. So as opposed to advice, I'm going to be discussing some high-level themes that could affect buying a house now and into the future. Things are changing so rapidly in the global economy that it's very important to keep up to date on emerging trends and possible impacts that can affect any of our investments going forward. Number one, after any boom period, there is normally a plateau or a flattening out of rising asset prices. I've observed this many times in the stock market and also in the housing market over the years. Now, the faster a sector rises, the greater risk of falls in that sector. An example of this is when we had the dot-com boom, which saw astronomical price rises of technical stocks. But after this boom, there were tremendous falls because the prices had risen too fast, too quick. So housing has seen astronomical price rises over the past 2 years across the globe. This doesn't mean that house prices are going to fall, but it does mean that there's a great chance that there will be a slowing down of price rises, a plateauing, because unless there's some major fundamental reasons to keep prices rising extremely fast, it would be very unusual to see the price rises we've had in housing continue for another 12, 24 months. When prices in any boom are rising super fast, you always need another buyer to continue those prices to rise. And normally in any boom, you'll run out of buyers willing to buy at higher and higher prices. Eventually the prices get so high that the gap between what the sellers want and what the buyers want creates a flattening out or a stabilizing of prices. There are many signs around the globe that the housing boom is starting to slow, indicating that we're unlikely to see the same type of rises in 2022. As well as a natural slowdown after a boom, there is evidence that interest rates are going to start rising all across the globe. The USA has seen inflation rise at the highest level for 40 years, and Australia has just reported above average inflation. But these broadcast inflation figures are nothing compared to the day-to-day increases in price that many people are experiencing. And this is across countries all over the world. The US has gotten a lot more hawkish regarding trying to control inflation, meaning that they've really brought forward the expectation of interest rates rising this year in 2022. From the looks of it, this will be echoed across many different countries. With Australia originally promising not to raise rates for a number of years, we've now got much higher inflation, a very low unemployment rate, so the Reserve Bank of Australia will most likely be forced to have to raise interest rates to make sure that they can control inflation so the rises don't get out of control. I think most people would agree that a massive factor in this housing boom has been caused by multi-year interest rate lows, some of the lowest ever. In many countries, you could probably borrow $1 million and still be paying less in mortgage payments than you would by renting. This has created a very unique circumstance where borrowing is so low that people are willing to get bigger and bigger mortgages just to get into the property market. So the fact that it looks like interest rates are now on the way up and a lot earlier than people originally expected could have a devastating effect on the housing market, as new home buyers are suddenly faced with large mortgages and increasing interest rates at the same time. Now you might think countries won't raise interest rates because it could affect housing too much, but the dilemma for many countries is out of control inflation can cause an even bigger issue than potentially negatively affecting the housing market through rising interest rates. So the extraordinary period of zero rate interest rate may be finally coming to an end, and this could have very large effects on all markets and especially the housing market. Another factor that could put pressure on house prices is the falling stock market. In the US, we've seen large falls in the Nasdaq and the Russell 2000 small cap index. This is the first time since COVID that some major stock market indexes have actually turned into a downtrend. It may be too early to call at this stage, but the massive stock market boom since COVID may have ended. And if that boom has now turned into a downtrend or a bearish market, that will cause pain across the board, because if the stock market falls, people's wealth will fall along with it. Now you may ask, what's the stock market got to do with housing? Well, there is so much money invested into stock markets. All superannuation, 401ks are so heavily invested in the stock market that nearly everyone's wealth is somehow tied up in the value of the market. So if the stock market falls, wealth falls with it, retirement funds fall. So it has a very large impact across the board. So we've seen significant falls already, but this could continue, which would put further pressure on housing because overall investment confidence will be reduced. Investors will be a lot less likely to take on risk when the stock market is falling or potentially crashing. So this is something to keep a close eye on, as the price rises for the stock market may have ended, and this could be an early warning for the housing market. Now there's plenty of debate as to whether we've been in a bubble regarding the stock market and housing. To see my discussion regarding a potential super bubble, check out this video I made here. Because if we have been in a super bubble, then the bursting or popping of that bubble could have extreme effects on where we go from here. One aspect of a bubble is extreme speculation in some sectors where asset values rise basically straight up. One sector where I think we may have seen this is the cryptocurrency sector. Now, in the last couple of months, cryptocurrencies have fallen significantly. Some of the major cryptos like Bitcoin and Ethereum are down around 50%, but that means nearly all the other ones are down even more than 50%, which I think everyone agrees is a very large drop. Another area where we've seen extraordinary rises is in meme stocks like GameStop and AMC. These were different from what we've seen previously, where a lot of retail investors got together and bid up prices of stocks that were heavily shorted by hedge funds. So in these stocks, we saw massive price rises even though the stocks were not in good financial condition. However, when there's mass speculation, we've now seen those prices erode of those stocks, and they look to be trading now in a more normal fashion. So the point here is some of that wild speculation has seen the biggest falls, and that's what usually happens once a bubble pops or bursts. So normally after a boom, you'd see the most speculative asset classes fall first and fall hardest, but then you might also see a flow on to other sectors, including the stock market and then potentially the housing market. I guess an important question to ask would be, is the housing market a bubble? Now, we probably won't be able to answer that until hindsight. If we see very large falls in the housing market, then we can look back and say, yes, we believe housing was in a bubble. However, housing is unique in that everybody needs housing, so that could shelter it from either some falls or significant falls. At this stage, it's very hard to tell. So what does all this mean? Well, basically, there's a lot of factors across the globe that could have a negative impact on housing prices going forward. We've got the normal exhaustion that happens after a boom. We've got the very real prospect of rising interest rates occurring quicker than expected. We've got falls across the stock market and even greater falls in those really speculative type assets. Now, because housing has had such a strong run up, there's still a lot of demand, a lot of fear of missing out that's still around the market. If you were to buy now, you might be paying a hefty premium that potentially you may not have to pay in the near future. For that reason, it could be well worth your while delaying purchasing a property. Obviously, no one can predict exactly what's going to happen, but as we've discussed, there's a number of factors all occurring together that could have a great impact on housing and could actually have a negative impact on house prices. If you are looking to buy a house, you really want to be buying in either a normalized market or a buyer's market. In the last 12 to 24 months, it's really been a seller's market where buyers have had to come up to what sellers are asking. But in a normal market, you'll have good negotiation between a seller and a buyer, and you meet somewhere in the middle. And in a buyer's market, it's normally the sellers that will have to come down to meet the buyers. So to buy right now, you're probably still going to be buying in a seller's market. And if that's what you need to do, then there's actually no problem with that, as long as you can afford it and as long as you can afford potentially higher interest rates. But if you're willing to take the risk to wait, you could potentially be rewarded with at least a more normalized housing market, and potentially in the future, maybe even a buyer's market will return. Let me know what you think the housing market's going to do in the comments below. I genuinely would love to hear your thoughts. Hey, don't forget to subscribe to my channel. I've got a lot more quality and up-to-date information to share. And if you are looking to purchase a property, I wish you all the very best. And no matter when you buy, real estate is a great investment. I'm Biko Konstantinos, and I'll catch you in my next video.